Welcome, everybody, to the COVID-19 update brought to you by the Franklin Partnership and the Policy Resolution Group for PMA and NTMA members. My name is Paul Nathanson. I'm a partner in the Policy Resolution Group at Bracewell. I'm part of the One Voice team working with Caitlin Sickles at PRG, as well as Omar and John, who you'll hear from in a moment. Just a reminder that we make this PowerPoint available on the onevoiceinfo.org website, along with a recording of the webinar. So don't feel like you have to take copious notes. You'll be able to access it. And also to remind you that we do have this resources page that you'll hear a little bit more about. That's onevoiceinfo.org. If you would like to submit questions during the webinar, please just use the webinar function on your computer and submit the questions. We'll try to get to as many as possible. And for those we can't, we will try to get back to you following the webinar. Now over to John Guzik.
Thanks, Paul. Omar and I, the Franklin Partnership, are part of your bipartisan government relations firm here in Washington, D.C. We've had the honor of representing manufacturers since 2002. In addition to representing a number of manufacturing associations, we represent municipalities, hospitals, and defense contractors. What we're going to go over today is what is going on in Washington, and not just what's going on in Washington, what's going on in the states. Because as we've mentioned in previous webinars, much of emergency management responsibilities lie within the state level. Then we're going to talk a little bit about what's going on in specific states where state governments are commandeering personal protective equipment. And one state has done it, and we'll talk about that, and then what that may lead to with other states. Then we're going to talk about the new CDC guidelines. We're starting to get questions from NTMA and PMA members about what does the company have to do if there is an infection within your plant. And so we'll talk about the new CDC guidelines. We're going to give you an update about the Paycheck Protection Plan. That's a small business loan program, and there's been a few issues there. And then we're going to talk about the new Federal Reserve made an announcement yesterday, a significant announcement, which we hope will facilitate the sending out of dollars from lenders to small manufacturers. We'll talk about next steps, and then what we are hearing in Washington of what is going to happen down the road. Caitlin?
Thanks. So we want to flag for you guys at the start that right now, about 95% of Americans are under some form of lockdown. So you can see on this map sort of the difference between what's happening in each different state, but you can see even last week there was a lot more gray on the map than there is now. And what that really means is a couple of things for people, but something that we flagged for you in the past is that a lot of the decisions about what a lockdown looks like in a particular state, who's essential, who's allowed to go to work, and even what businesses are allowed to remain open, that's being made at the state level, and then oftentimes even more local at the county level. And so that's why there's really a patchwork policy all across the state. What One Voice has been doing is advocating to try to create some equality across the country in terms of how these things are defined. And what we've been doing, for instance, is on this slide, you can see that there is a critical manufacturing definition that was put out by CISA from the Department of Homeland Security, and that really would cover most One Voice members. But here's the issue. This is just a guidance from the federal government. Some states are applying this. Some states are incorporating this definition into their stay-at-home orders and into their essential business definition, but not every state is. And I know I'm not telling folks on the call anything. Most of you know this because you're grappling with this distinction, and states really set their own guidelines. For more information about this, you can refer to the website that Paul mentioned at the start, which is onevoiceinfo.org. That's where your One Voice team is tracking every single state. This chart that you see, what is the essential business definition? How do you deal with that? You can get all of that information on the website, and then of course you can always reach out to us with specific questions. But that is the important information here, that it's decided state by state. One other thing I'll note is a lot of folks have asked us, well, how does my company get an essential business designation? For the most part, that's not really a thing. Like, individual companies are not getting essential business designations. There are some exceptions, a handful of states, but for the most part, that's not really a thing. It's that companies are reading that explanation into their state guidance, and then they're deciding for themselves whether or not they qualify. And so just with that in mind, I'll turn it over to Omar, who can give more of a state of the state and then also get into what we are seeing at the federal level.
That's exactly right. And to Caitlin's point, it's evolving very quickly. For example, we had 2 states just issue updates to their existing rules this week. Actually, I think 4. Michigan also made another change. New Jersey became much more stringent, and we saw some other changes. So you have to be constantly aware of the tightening of what's happening at the state level, county level, in addition to what we're also watching here in Washington. So that's why we're updating this chart regularly. We also have a more detailed Word document that you can take a look at with the actual details for each state and what they've got, with a more, again, detailed version of this out there. So we do encourage you, just because your state put on lockdown a couple of weeks ago doesn't mean the same rules apply that did just a few weeks ago. There's quite a few different changes that are taking place on a regular basis. For example, just on Wednesday, the state of Commonwealth of Pennsylvania, issued an executive order stating that they have the ability and will begin commandeering and all PPE, pharmaceutical, and other medical resources required. And they're permitted to go to private, public, quasi-health partnership providers, facilities, as well as manufacturers and suppliers of PPE, and commandeer that equipment. We began to hear about this last Friday from one of our One Voice members who did report that they had some PPE get redirected, and the statement they received from their vendor distributor specifically cited the government telling it that they had to redirect that shipment. Here you're starting to see the Commonwealth of Pennsylvania stating as of Wednesday that they will confiscate and not confiscate, but they're going to commandeer and take your PPE and redistribute that as they see appropriate. Now, that does raise some concern. They are going to pay you for it. They do have I believe it goes up to March 7th or something like that. The week prior to it, they look at the average price of that material, and that's how they'll compensate the individual businesses for taking it. And you are going to be required in the Commonwealth to report by Monday, I believe the 13th, into a portal your existing inventory in the Commonwealth. Both associations issued a notice to those in that state. We're standing on this slide for a moment just because this could definitely come to a state near you. In addition, we do already know that FEMA is already having certain shipments diverted to their stockpile. They're taking it from hospitals, they're taking it from private employers, and yes, they're also taking it from the states themselves, and they're going to FEMA first, and then FEMA will ultimately disperse that. So that's now something to be watchful for. It's an additional regulation that's rapidly evolving. Something new from Pennsylvania just came out on Wednesday of this week. Speaking of which, every week we're getting at least a couple of different guidance documents, whether it's from EPA, Labor Department, or increasingly from Treasury and SBA. We put this up there since we started to get more and more questions recently of the what if question. What if there is a confirmed case in our shop? What do we do? How do we respond? There were a couple of new guidelines that were issued this week on April 1st, 2nd, and then the 8th, the CDC issued new updates to their existing guidelines. A couple we did want to highlight here in terms of waiting 24 hours or as long as practical before beginning to clean or disinfect, if you do need to do in effect disinfection of that workspace. And then you'll notice at the bottom there, it does say if it has been more than 7 days since the person with the suspected confirmed COVID-19 visited used, then additional disinfection is not necessary. Of course, you definitely need to cite and use, if you're using a professional cleaning service, still understand where they are. On April 2nd, the EPA updated their list of disinfectants that they've got approved for use as well. So these all three are links in here. You can also find it on the onevoiceinfo.org website, just to give you a little better sense of where the government's going, since they're constantly updating the guidance that we want to have out there. I'll turn it over to John for a little bit, just to start as we transition more into the COVID-19s. As you'll see, the ones in green are what we've already gotten a law, and the ones in red are those that are still pending.
Yeah, and for those who haven't been on previous webinars, Congress has passed 3 phases of economic, some would call it stimulus, Omar and I would call it economic stabilization. Phase one was done several weeks ago, which basically provided additional funding for vaccines and test kits. Phase two went a little farther, provided 2 weeks, 10 days of paid sick leave and emergency sick leave and emergency family medical leave, as well as the tax credit for employers. Phase three is what we've spent a lot of time last week talking about, and that is it's not just the Paycheck Protection Program, which we'll talk about more extensively, but also includes direct payments to individuals. I think it's $1,200 per adult, $500 per eligible child. It's additional funding to state and local governments, additional funding to hospitals. So now that's what they've done. So now where do we go from here? There was an attempt this week about what we call phase 3.5, where Senator McConnell tried to get unanimous consent to get additional funding for the Paycheck Protection Program passed. There were some objections by the Democrats, and so that failed. And so does it look like, it now looks like there's going to be a phase four, which is going to be additional dollars, most likely to state and local governments, hospitals, and manufacturers, and these particular loan programs, which have been successful. Congress, Speaker Pelosi has indicated that the Congress is not going to come back in April, after initially indicating that they might come back April 20th, but that's not going to happen. So this phase four likely happens in early May. That leads to phase five, which is what we've been telling the administration and folks on Capitol Hill is once we get over the virus concerns, we need to make sure there's enough capital for folks, for manufacturers to reinvest in their businesses, to buy the necessary equipment and raw materials to gin up this economy. And so phase five, we look as more as the true economic stimulus package moving forward. And that likely will take place in June or July. Go ahead, Omar.
Right. Thanks. And so I think for the remainder, most of this, we're going to focus on the PPP and what we have learned since last week, so that way we're not overly repetitive. So we're not going to so much walk through this slide. We keep it in here for everyone's reference, especially those that aren't as familiar with the Paycheck Protection Program loan that is a 100% guarantee by the Small Business Administration. Since we last spoke on last Friday, April 3rd, we have received a number of updates, I believe 3 updates so far from Department of Treasury and Small Business Administration on their questions and answers, which has helped provide a little bit more clarity. The challenge, and we just have to warn you all, that some of the lenders, one, either don't understand the guidelines, or 2, are imposing additional requirements that were not in the statutes. So we're trying to address some of those. We are submitting a list of questions that we've received from members to Treasury Department here in the morning, and hopefully, or this afternoon. So hopefully that will get additional clarification. We were just on a call with the General Counsel for the IRS, and they indicated we're going to get a couple more updates next week from them. They're going to update the 941 form for those that are looking to do some of the tax credits that were included in the initial round, initial phase 2 legislation, and they're also going to update some of the other items that were there. So quickly, as we go through the overall of where we stand, what we believe, there was a question that came in just now, do we know how much of the $349 billion is committed so far? As of last night, I think Bracewell may have the number as well. I think we saw it was about 116 billion out of the 349 billion was as of last night. So let's just assume that we're, as of this morning, probably about 1/3 of it has been committed, and that's the challenge. It's a first come, first serve, because that's another question that we received about this here about, we've got a small bank that the application's been submitted, but the portal is still not either fully connected to SBA or the bank's not getting the response that they need. And that's a challenge here. And so I think John brought this up, and we'll talk about it more later in terms of the phase 3.5, where they potentially could add another tranche of funding because they already recognize that they're going to need more money. Because as you can see, the loan uses here are pretty significant in terms of the payroll, and all those expenses are going to quickly pile up with the demand that they've already seen. So what we understand is it's about 1/3 or so. Now the concern is for us in manufacturing is that today begins the period of when we've got the independent contractors and the self-employed that are now eligible to start applying for the loan. So that's going to put an additional strain on the system, which is why the first come, first serve situation is even more important than it was this time a week ago. We did provide an additional slide here. Again, it was a little bit dense, but this because we don't provide interpretation because we're not attorneys or financial advisors, we're literally just copying and pasting from the advisories and the regulations that are presented. So this will give you a breakdown of how you can have the first 8 weeks of your principal and your interest forgiven on those qualifying expenses. So again, the inverse of the top point, similar, you must effectively only use these loan purposes for payroll costs, mortgage, interest, rent, and utility payments as part of the forgiven. So those are the items that are eligible to be forgiven under this loan. And then you also must keep in mind that you've got the 25% threshold that you cannot exceed in terms of non-payroll costs. And so that means the mortgage, interest, the rent, utilities, obviously. So they're trying to make sure that 75% of the forgiven amount is geared towards the actual salaries, the payroll of that individual that's associated with it there too. The 8-week period, this was some clarity we just received, I think on Wednesday, or it might have been in Thursday's update, that the 8-week period doesn't begin from when you submit or from when you're approved. It's from the first date of when a disbursement is made to the borrower. So that's from when that time frame actually begins, and you have until June 30th. This covers expenses through June 30th. That is pretty much the timeline that they're doing across a number of bills. In a few spaces with unemployment insurance, that's till July 30th. Everything else is a June 30th that you need to get this money expended by therein. So again, you will owe money if you do not maintain your staff and payroll, and that's what they mean by maintaining it. You want to compare it back to effectively February 15th and where you end up. So if there are any reductions that anyone needs to be making, unfortunately, if they have to, then look at that April 26th date as in terms of the date that you're going to have the final pinpoint. So you're going to have to make changes between now and then you can return it to the previous level following that. Again, borrower submits for those of the forgiveness items. A few things at the bottom. You need to be careful that just don't expect that loan is automatically going to be forgiven after 8 weeks. There's a number of steps that have to go through. One, the lender is going to have to work with the Small Business Administration to verify that all your paperwork is in order, from that you certify the forgiveness was used for those eligible costs that are out there. And then from that standpoint, then the lender can make the decision on forgiveness within 60 days. So you're still looking at possibly another 2 months following that forgiveness point prior to you being able to have that loan secured and having that loan forgiven and repaid for you all entirely. This we provided last time, just for those that haven't already submitted a loan application. Mostly the new updates there are towards the bottom. This is what we're hearing some of the other forms specifically, including independent outside contractors and folks like that you're going to want to take a look at. This is a new one. The next slide is the one that we had up last week. So these are latest that we've gotten from the frequently asked questions and the Q&A guidance that we've gotten between IRS, SBA, and Department of Treasury. Again, first disbursement in 10 calendar days from the loan approval. We know of folks that had their loans approved as of either Sunday night or Monday morning. We not aware of anyone that has had money actually deposited. So we will work on seeing how quickly that's moving forward. That's come out. There's been a number of questions that we've received with regards to the affiliation rule, meaning that if you are either a subsidiary or that you are owned by private equity, venture capitalist, or even a foreign entity, then what we're understanding from that standpoint is that they do have a new guidance, and we are happy to send to you. It'll be up on the website in terms of how they're treating affiliation rule. Largely, they're looking at it by either management or ownership. If an outside holding company or business has a 50% control or more over your board or over your decision making, then they are considered affiliated. For the minority share, if they have veto power or can stop do hiring, firing, lease, termination, business decisions, then they also qualify as an affiliate, even if they have minority share. And so they also have to be counted. What we're seeing so far, but we do likely expect to get some additional guidance, may not be good guidance, but in terms of the foreign ownership as well, is right now there seem to be just using the affiliation rules for the 500 employee count and not so much for the foreign persons. Now, you still can't use the loan for paying people that do not primarily reside in the United States, but at this point it does not preclude and seems to supersede the existing regulations that govern normal SBA affiliation rules. So that's something to talk to your lender about, since they may have their own interpretation, but as of right now, That's what most of the folks in Washington are coming back with on the affiliation rules. It's mostly going towards that count, and you do need to make sure that if you are partially owned by another business, that you're counting all those together. Again, temporary.
Omar, just really quickly, this is Caitlin. If people are looking to find this specific information, you can find it on the onevoiceinfo.org website. Go to the federal legislation section and just scroll down. We have links to all of this stuff here, and you can find it. There's a section called Implementation Guidance right in the center. You can see under Small Business Provisions all this information, all these links, including to the affiliation guidance that Omar's referring to right now.
Yep, exactly. And we did get a question with regards to returning for the forgiveness slide previously. If you return to 100%, yes, if you return to 100% anytime prior to June 30th, then the forgiveness kicks back in fully. Even if you are not at 100% at June 30th, there is a sliding scale where just a fraction of it will continue to be reduced that is forgiven to 25%. So they do have a period recognizing that everyone might not be 100%, so they do provide a little bit of cushion there. So yeah, as Caitlin said, this is all available for you all to take a look at. One clarification that did come out was on the payroll tax and on FICA and not being eligible under the PPP, but the employee withholding is still going to be sent over to the federal government. So the employer still is on the hook for their payroll side of the payroll tax side, and they can't use the Small Business Administration loan to pay that payroll tax. This one we've had before, so we're not going to review that. The only item that is new on this slide is the one that we have in italics, which is what we received in terms of the employee over 100K. There was one lender that reached out or told one of our manufacturers that they would not be able to use the loan to cover any health benefits or retirement benefits for any employees that earn over 100,000. There was a clarification on Wednesday that in fact, yes, you may still pay for employees' health care or other benefits, even if they're earning over 100,000. You just may not be able to use the loan for any of their wages over 100,000. So their health benefits are covered, just to fit better on the slide, but that is the only change to the slide from our presentation last week. Just quickly.
That's part of the challenge. That's part of the challenge that you get many manufacturers are facing, because banks are coming up with their own rules sometimes, like that example. And so when you do hear about something strange that doesn't sound right, and it's contrary to what is in our webinar PowerPoint, bring it to our attention and we will investigate it. Go ahead, Omar.
Yep, no, absolutely. Because that's exactly what we're trying to do. We're trying to continue to collect those questions. Some of them, obviously, we're not attorneys, we're not lenders. We can't answer them all, but we're trying to be able those that we can. That's why we're trying to keep that running list. Every week, we'll try to give you the latest. And those that we can't answer directly on this list after this webinar, we always collect those and we're either passing them along to the government entities or some of the others that we know are also working on these with us. Because again, it's rapidly moving. This is just one lender's workbook that they put out. As you can see, when you're calculating the amount of loan that you're eligible by, the key things to keep in mind here are, again, June 30th, but they really are just trying to get you through 2.5 months. That's their whole plan here, is whatever they can, which is why your loan is multiplied by 2.5 months. And so this is a pretty basic worksheet that just translate a lot of the words that were on the previous slide of what you have to plug in there. You find your average monthly payroll costs, similar to the one that we showed last week. So if your average payroll each month is 100,000, you multiply that by 2.5 and you get 250,000. And then that's where they go on there as well. So where they look at, here's your form that you've got to fill out. Your again, pretty basic. We checked again a couple days ago. I don't believe they have this changed since, but they have put out additional lender forms and lender changes on the backside as well. So try to keep track of some of these that are out there. Just, John, you want to touch a little bit on the Federal Reserve and what that's doing now as a backstop, since one, there's obviously been challenges with the PPP program. Even if that gets additional funding, the Fed took some significant steps to really step in here.
Yeah, yesterday morning at 8:30, the same time that the Department of Labor announced the unemployment rate, which was a bad number, the Federal Reserve came out with their guidance and moving forward. They announced nine new programs, injecting $2.3 trillion into the economy. One of the challenges that we have heard from the lender side is that the lenders were afraid that they were going to be left liable for the loan, the PPP loan left on the books. And what this Federal Reserve guidance did yesterday is basically what reassured the lenders that the Federal Reserve will purchase back those loans and that those loans will not be part of the bank's debt ratio. And so after that announcement, we are expecting the flow of funds from the lenders to increase moving forward. In addition, the Federal Reserve announced the Main Street Lending Program. This is a loan program for under 10,000 employees. It's capped at $600 billion, I believe. Loans you can get a minimum loan of $1 million to $2.5 million. And it's just one other loan. You can put this on top of a PPP loan, but 90% of the significant percent of the resource, the employer must maintain a workforce moving forward. And so those are a couple highlights of the programs that the Federal Reserve announced yesterday morning.
Exactly. So it's important to also notice at this point, there is no floor for the number of employees. So at this point, the way that the Fed Reserve guidance with the OCC yesterday that came out is that you can have one or more employees basically and be eligible. So theoretically, then you could be able to apply, and it does say you can, in fact, apply for both the Small Business Administration PPP loan and also go into the Main Street Lending Program. You recall the legislation initially and what Treasury came out with previously was more focused on the 500 to 10,000 and then 10,000 above. They were part of that. Now what Treasury has done is included these that go below. Now there's still a chance that next week we might get guidance from them, since they haven't opened this up yet, that they will do only 500 to 10,000, but as the way it's written today, it does include. So that might be an option for some other businesses, but you do have to look at cannot reasonably attain credit elsewhere provision, which some might argue that you are under 500, you have eligibility to go into the SBA program. So therefore the credit elsewhere provision might preclude you from entering into this. But that's something for some businesses to take a look at, especially if they are under the affiliation issues that might get them to over 500. This is something that might be an option for them to look at as well, in addition to the Small Business Administration rule out there. So again, we continue to expect some additional guidance from the Fed Reserve. They indicated hopefully next week on this, just as we still are expecting even more guidance on the PPP program. Still isn't fully set and done. But as we mentioned, Marco Rubio, the senator from Florida, he's the main author of the PPP program. And he already predicted earlier this week it was going to run out of money. That's where the $250 billion comes from. And that's what he's put out there as the one being the priority. But John, the Democrats have now kind of come back and forth. And so the bill did not go as planned with McConnell yesterday, but most of us didn't think that was going to happen.
Yeah, Senator Van Hollen from Maryland objected to the unanimous consent, while McConnell wanted to move a $250 billion bill. Van Hollen and the Democrats, and with the support of Speaker Pelosi, wants an enhanced Phase 4 bill to be included as part of this. And I think their price tag in the McConnell motion was up to $500 billion of more spending. It provided additional resources for the Paycheck Protection Program, but also increased funding for state and local governments, hospitals, and such. It also earmarked that some of the funds would go to women-owned, minority-owned, veteran-owned businesses and such. So that was phase 3, what we call phase 3.5. That failed, notwithstanding another attempt by the Senate Majority Leader McConnell on trying to move a clean expansion of the PPP program. I think we're looking at phase 4. And so that's why we have reached out to the NTMA and PMA members to tell us, in addition to more funding for the PPP program, what other programs are out there? What else do we want to include in the phase 4 stimulus package?
Right, and so you'll be getting a survey from One Voice coming up on Monday, most likely, that is starting to look at getting a better sense of what some folks are seeing out there, what some of your needs are. Again, in addition to funding for loans, some folks, there is a senator from Missouri today, Josh Hawley, just came out and said that maybe we just need to do direct, or came out yesterday rather, saying we need direct payments to businesses to cover payroll each month. He actually said the exact same thing as one of the squad members, one of the most liberal members. She came out independently yesterday saying the same thing along the lines of what the Germans are doing. So those are things that are looking at. We know employer liability protection during this time has been a concern, and so those are some of the things that we're looking at doing and working with members on getting some answers. So when you get that email from NTMA PMA on Monday from One Voice, please respond, because that's how we determine what we take to Capitol Hill. It's one of these situations where if we don't hear from you, we don't know it's an issue. So that's why it's so important to fill out that survey that you're going to get next week, since that is effectively going to be your pipeline to the White House and everybody else that's out there. Just quickly, as we look in a wrap, and we'll start answering some questions here in a minute. We did actually, as we mentioned last week, now that we've gotten the Fed guidance has issued a ruling that these loans under the PPP will not go on the books and go against the banks on their credit sheet, and the Fed will buy them up so that way they can re-leverage and buy, and banks can go back and purchase even more under the 3P program. That's adds number 8 out of 10 recommendations that we were able to secure. So that's why, again, we're looking for some more suggestions, and that's what we'll be gathering through that survey that comes out there. A couple of things that we're hearing, John, I think that we're hearing that different banks obviously are playing by different rules. I think the smaller versus the large, and then the mid-size and the middles are all responding differently.
Yeah, and last week we were getting, or this week we were learning which banks were accepting applications, which ones were not even accepting applications, and which ones were accepting applications and not processing them. And then other banks, you know, as we pointed out earlier, came up with their own rules, which are beyond the scope of the PPP program. And so, you know, we tracked down each one of those. One of the banks that one of the members brought us to was Comerica Bank in Michigan. And so through conversations and such, Comerica has finally initiated bank loans, but they were worried about the being stuck with the liability of it. We are hearing that smaller banks are really struggling to engage in this program, whether it's because of the portal system, whether it's because they don't have enough employees to manually go through these loan applications. Our sense is those medium-sized regional banks is the sweet spot for processing these PPP loans. So keep that in mind if you haven't moved forward with an application yet. Another thing that we're starting to hear is that not many manufacturers have received new quotes in the last 2 to 3 weeks since this virus has taken place. And those that are operating are basically operating, fulfilling that backlog of work that needs to be done. And what we have been communicating to the administration and the Hill is there may be a little shock to the economy in 2 to 3 weeks when your backload, your back orders disappear. What are you going to do with your employees? I mean, there's only so much repainting of a shop that you can do, and we are making sure that the policymakers understand that this is critical. We may not be able to wait till early May for a phase 4 bill, because there may be a shock to the economy because the work's just not there. So those are just a couple of things that we're hearing.
Right. Yeah. We talked to someone saying right now we're finishing our backlog as we've got a couple of weeks going, and after that we're going to move to maintenance. And one person texted us and said, I'm just going to have them paint the shop. So again, whatever it takes to keep them on payroll, that's what the government wants you to do. So our concern is that in a couple of weeks, potentially, that there might be another wave of challenges for manufacturing, especially if we're not able to get some of the funding for that to come through. One other item that's starting to go around a couple of the listservs on which we belong, in terms of, we don't want to call it hazard pay, just because you don't want it to connote the thought that you might have an employee entering a hazardous work environment. But we are hearing in some pockets that some people are starting to provide essential business pay for those shops that are in those states that have been declared essential business. So I think those are things that we're continuing to watch, and obviously the concern over employees being stopped to and from work, and that's something that Caitlin addressed early on with regards to some of the challenges that people have with the law enforcement in literally trying to enforce stay-at-home orders when you got employees that are permitted to travel to and from. So that continues to evolve, and we'll keep folks aware of what's going on with that as well. But again, that's why we need to be able to get our story out in the media, just as we're doing up on Capitol Hill.
Yeah, so we're still receiving multiple media inquiries from major media outlets that are interested. So we're working through both association headquarters to, so you be on the lookout. We might get to have some requests for you. It really supports what John and Omar are doing in Washington. We're also continuing to promote success stories and the nice things that you are doing and the important things that you are all doing. So keep feeding them to your associations, and they get them to us, and we highlight them on our social media channels, and we will probably send out a press release to the media next week. One other thing I wanted to mention is, we did, going back to the last slide, we did a non-member client of Bracewell's was visited by state troopers in Maryland regarding why they were being open, and it took an intervention in the governor's office. So we're hearing more and more stories like that.
Yep.
This is
And
just a URL where you can find more information. I'm noticing a couple of people writing in questions, Paul, to what you were just saying about being, getting visits from law enforcement or having workers stop. Some people are saying that they have provided essential customer letters or posted them even in their facilities, provided them to employees. So we can touch base with folks who are doing those kinds of things offline. Maybe that is like sample resources that we could provide for people and put on this onevoiceinfo.org website. When we have resources like that, we have them down in the middle of the page on One Voice materials, One Voice communication tools, that kind of thing. So you can find it there. And then just to what I was saying earlier, you can track all of this information, either state action or federal action, by following those links on this website. The only other thing to flag for you guys is that we are still doing our podcast. If this webinar is not enough for you and you want to hear from us beyond it, you can always listen to the podcast. We are talking, of course, about all of the things we describe on the webinar. We're also still talking about politics because, believe it or not, politics is still happening. In fact, of course, lots of significant announcements this week in politics with the Sanders campaign suspending. So there's lots to discuss, and we do have those conversations on the podcast, just so you know.
thanks. And with that, we'll take a few questions. We try not to run this too long. And if there are a few on here that are going to need either a CPA or some legal lending advice, we'll definitely reply back to you. Keep track of all of these questions. One question that we've just gotten a minute ago with regards to add backs and EBITDA under 2019 of the Main Street Lending Program, whether or not the ability to use there. As we're speaking, we just looked that up. No, on the EBITDA, they did not do the guidance yet. In yesterday's, it was not addressed from the Federal Reserve. However, we do expect another guidance sometime in the next week or so with regards to the Main Street Lending Program. So we'll see if that gets addressed then. Again, we will check with some of the CPAs that we know at the time, that we know that we'll probably be a little smarter on that since we're political science majors and lobbyists. But that's at least what we've seen so far on that guidance right there. One of those questions that came in, are manufacturers paying hazard pay to their employees is covered as part of the payroll loan? If right now it doesn't have a necessarily added, so what they do is they look at total compensation that you would report. So they wouldn't break out bonuses, commissions, all of those are included in your total. So we would also go in and assume, but your lender would be the final one to interpret it, but the hazard pay would, yes, likely be considered part of their compensation as part of their salary, as the definition that we have on one of the previous slides that's out there. A few others that we've gotten, and one is we've got great input from Hale, who was on a roundtable webinar with us on Tuesday. Again, when it comes to the essential businesses that Caitlin was just referencing, make sure you've got a sign clearly posted in the lobbies, post one facing outwards with regards to your front shop, so that way law enforcement can even see that upon entry. What they're effectively doing is they're just driving around, kind of like when the unions go to figure out who's their next target. They look at parking lots. That's what the police officers are doing. They're going to see why there's so many cars in certain parking lots, knocking on the door. And so you want to already be able to have something that's already prepared. And you basically effectively want to copy and paste the government language as much as possible by saying, here's why we can be open and out there right now. There's a question about interest on the term debt. paid as the loan? Can it be funded with these proceeds? I think effectively is the question then, can the 1% interest on this be paid through the PPP? The principal and interest on the loan are forgiven for the first 8 weeks. After that, the interest does continue at that 1% rate. You can use this loan to work on other previous debt obligation interest, not the debt itself, but the interest to those other debts prior to February 15th is permitted for the fund use. We have not seen one though that says following the end of the forgiven term, can you have, because the rest of it goes up to 2 years. The rest of it, I think you still do have to pay the interest. Did not see that you can pay it out of there, but that's something that we can confirm on there as well. In terms of the dates that are out there, again, your lender, especially if you know them, they'll tell you some of the answers with regards to how you want to calculate your FTE rates. They also do have a time period where you can cover for the first 2 months of this calendar year through the 29th of February, or you do the previous from last year's. So they do have a couple of different ranges. Typically with the lenders, at least we're hearing from you all, are telling you to ask for more, be more generous. Even if you don't need to use all the money, you can, one, always pay it back or use it for other proceeds with the employees as long as it's a qualified use. Most of the lenders are telling you to request as much as you can because you don't know what's going to happen in 2 weeks from now. And so that's one of the concerns that many people have, is that you just don't have the uncertainty around the corner. So even if you're fine on payroll right now, there might be something down the road, one of your customers shuts down or you do have a spread, and it might be too late because, again, first come, first serve. Another question we received was,
Omar brought up a good point. And ask for more, but make sure you spend the money on qualified expenses, payroll, wages, healthcare, interest on mortgage interest, rent, utilities. Those are the qualified expenditures. It's not for paying off a machine or buying a new piece of machinery.
Right, exactly. That's got to be important to take a look at. One thing that we wanted to touch on that we really haven't spent a whole lot of time on is what we call the EIDL. The Small Business Administration in February, as part of phase 1, created the Emergency Impact Disaster Loan that the SBA also provides a 100% guarantee on. Its interest rate from 2% up to 4%, with the normal average being 3.75% for businesses, 2.5% for nonprofits. What that effectively does, you can receive $10,000 within 3 days. So the actual EIDL goes up to $2 million that you can receive. Any loan above $25,000 requires collateral to be put up against it. And so you do have to deal with some of the other issues. If you already had an EIDL already in place prior to, I think it's April 3rd, you were permitted, prior to last Friday, you were permitted to roll that into this SBA 3P. So for some that may not want it or may not need to go through the 3P program, you can apply in the EIDL, the Emergency Impact Disaster Loan. That is injury disaster loan. That is done directly through the SBA. So you go onto the SBA portal. There's about 24 or so fields that you've got to fill out based on your incorporation style, and then you can go ahead and do that and be able to move forward if you so choose. But again, at this point, our understanding is SBA is trying to push you more into those that can be forgiven, because the EIDL, where you can get to 10,000 within 3 days quickly, that is not a forgiven loan. But again, it is at the low interest rate, but still it's not 1%. So you're better off still going through the 3P program, unless for some reason you're barred from doing so. One question we got on the bonus, and so we got this question from a couple of folks on. We've done a number of webinars earlier today. So if we pay bonus during the 8 weeks forgiven period, do we include that as part of the 100,000 calculation as a one-time amount, or do we take 8 weeks total compensation and annualize it? We'll get a firm answer for you on that one. But really what it comes down to is it's $8,333 would be the total monthly compensation that you're permitted to do to any of the high earners that are earning 100,000 or more. So 8,300 is effectively what they've written down as the top. So if you do a bonus that pushes them above that 8,333 number, then that part would not be used. You cannot use the loan for that part as well. There's another question about affiliation rules. The SBA FAQ suggests a borrower with 500 or fewer U.S. employees will be eligible. It separately references the affiliation rules. Does that mean a business with 500 or fewer employees is eligible, even if it has foreign affiliations that would take its worldwide employee count above 500? The answer to that is no. If your affiliation rules under the SBA initial rule guidelines and under the updated one from April 3rd, those two, I think it might be April 2nd, that posted April 3rd, those state that if you trigger, anything triggers you over 500 affiliation, international or domestic, you are not eligible for the 3P program. So if that international affiliation is what is getting you over, whether based on majority ownership, minority ownership, majority control or minority ownership, or if it triggers the management, co-management trigger of the 4-part test, then no, you're not eligible. Again, so that's what so far they've been doing with the foreign ownership. They have not precluded you like SBA normally would automatically. They are just stating that right now they're using the number for 500, although we wouldn't be surprised if that gets narrowed in the next batch of regulations in the next week or so. Yeah, we're running a little bit long. Any other questions? The NAIC size, yes, there was a point on the NAIC size limits applied to the PPP. For our industry, that is almost always 500. We do have a couple that go at 750 and very few, I think of some of our affiliate or associate members will get up to the 1250 size. But what you can do is on sba.gov, there is a link in there that goes to size standards. And a lot of this is that they go up higher. So you can go into different categories. The majority of our industry tends to fall around 500, but yes, there are some categories where they have made certain exceptions. We worked with the Motor Equipment Manufacturers Association. They took the lead primarily on that with the auto industry. There were a lot of folks in Michigan, especially, that were concerned about that size number. So we talked to Catherine, their lobbyist, about this a few weeks ago as they were working through the CARES Act, and they were the ones that worked on making sure that you can get additional size standards. So again, from that 500, again, it does address for most of our members. There are some that are certainly over that. So you do have the option of taking a look at it from your NAICS code. So yes, appreciate you bringing that up as well. Any other questions? Nope. Again, this webinar has been recorded. It'll be posted and emailed to everybody along with the slide deck. Again, to try to use it for just as reference points. The previous ones, I believe we've also got as well, if you need to see any of the other slides, since we did not touch on the Family Medical Leave Act and the paid sick leave as well, which most folks are starting to get accustomed to. But as we get updates on those, we'll make sure that everyone remains up to speed on everything. Again, reminder, we'll continue to do these webinars, assuming folks would like them, every Friday at noon Eastern. And again, we'll try to keep it a little shorter, closer to that 30-minute mark next time.
You can find all of the webinars, both download the slides and also watch a recording on the One Voice Info website. It's right up the top, weekly webinars. It's the first link, and all of the webinars we've done so far are available right there.
Thanks, everyone.